Hey everybody, it's Pete. Good morning. Hope you had a nice weekend. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something interesting. We've been keeping everything kind of high level and whatnot. Today we're going to talk about the top 5 day trading mistakes that after years and years and years, I probably made all of them. But I think today we're going to narrow it down to the 5 that I think if you reduce or eliminate them, I think they'll make the most dramatic impact on your day trading. And what's kind of interesting is as you're day trading, and especially if you're new to day trading, where maybe you're home because of the pandemic right now, and you're in front of a screen all day, every day for the first time, you're probably finding it to be almost foreign to you, where it moves a lot faster than you expected. There's a lot more opportunity than you expected, and you kind of feel like you have to be involved all the time. And that's kind of what we're going to talk about today. So the first thing you have to learn when you get into day trading, or when you start day trading, or when day trading gets exposed to you, really the first thing you have to learn what to do is what not to do. And that kind of really puts you into a position where now you're only looking at what you should be looking at, only trading as you should be trading. And then it becomes actually a lot easier. Now, it's simpler, but it doesn't mean easy to make money, because when you have less to do and you understand what you're doing, you're kind of just basically sitting back and looking for entries. And I know that kind of sounds like hype, and it's really not. When we get actually into the first one, I'll explain it a little bit more detail. So we're actually going to jump right in. If you find these videos helpful, definitely click down and subscribe. That would be awesome. If you've had some success, definitely let me know too. I'd love to share in your success. That'd be kind of cool to hear about. And if you want to trade together in real time, click down and learn about the boot camp. That would be fun too. So anyway, we're going to head right over. So the top 5 day trading mistakes. So if you aren't aware of it, I've been trading, and specifically day trading, for 20 years. So I can definitely vouch for what can turn you around quicker, because I've gone through it. I've tried everything. I've done everything. And there's really just certain things that make a monster difference in whether or not you're successful. So day trading mistake number 1, and this one's a big one, and I'll explain why. Number 1 is you're not prepared for the open. It's very common for somebody to be all excited about coming into day trading, and all of a sudden they light up their screen and everything is flying all over the place, and it can be overwhelming and you're scared. And then what ends up happening is you say, it's too fast for me, I can't get involved in this, I need for the market to slow down. What happens is then you let the market slow down and you start trading at 11:30, 2 hours after the market opens. And now all the volume's gone, the volatility's gone, and you're placing safe trades with no chance of making money, no chance of losing money, where 9 out of 10 times, those are the times of days where nothing is going on. I will tell you flat out, it's imperative that if you have a strategy, which my strategy is obviously order flow and tape reading, trading becomes fun when you've done your homework. And when I say done your homework, it essentially turns into the fact that you really are looking for money. When you do your game plan, I do mine on the 7s. I do it 7 o'clock at night, 7 o'clock in the morning. I do it at 7 o'clock at night, and I make a big list of stocks that I'm going to trade for the next day. And obviously, big list is relative. Then the next morning at 7 o'clock, I review those stocks to see if any major news came out, to see if anything changed in those stocks, if anything changed in the market that might affect my bias overnight. And then when the market opens, I'm really only looking at those stocks. One of the mistakes that I see that a lot of new people do related to the open, and really related to trading all day as well, is they start out thinking that they need more ideas, and they'll get live scanners and screeners and alerts and all of that kind of stuff. And really, more ideas after the market opens is really amplifying how confusing the market can be, because you'll start to see this stock made a new high, this stock made a new low, this stock made a new high, this stock made a 5-minute high, this made, and all of a sudden you can't see straight. So not being prepared for the open, and the opposite of that, or being prepared for the open, means you have a list of stocks that says, these are the stocks I want to buy today, these are the stocks I want to sell today, and based on how the market closed yesterday, and based on how it's traded the last 3 to 5 days, adding a little bit more in there, right? I know what I expect to have happen on the open. So I'll give you an example. Let's say 2 days ago, the market closed with a big green candle, and then yesterday it also closed with a big green candle. Today, you're expecting a flat opening and a push higher. It's that simple. That's a part of being prepared for the open. I'll give you another example. Right now, we've had the market's obviously still trading much higher right now. We're sniffing all-time highs again in the SPY. But a couple of stocks that we've been trading as long, stocks that we've been buying, have now closed on their lows for the last 2 days. So some profit taking came in after a really beautiful bullish run the last 2 weeks. So because those stocks have been bullish over the last 6 to 8 months, the last 2 days they traded lower, closed on the lows for the last 2 days. I'm actually looking for a lower opening in those stocks. I'm looking for buyers to come in, and then I'm looking to initiate a new day trade and swing trade long. So that's a part of being prepared for the open, is having your correct list that meet your criteria, and then going into the day knowing exactly what you plan to do in that list. Now, there's no excuse to not be prepared for the open. Number one is the market closes at 4 o'clock in the afternoon and opens 9:30 in the morning the next day. That's a lot of time in between for you to say, these are the stocks I want to trade. If you're just waiting for the market to unfold, or if you're waiting for Jim Cramer to tell you what to trade, or anybody, quite honestly, you're not learning how to trade, because if that service closed down, you're not learning what to do, and then you have to go searching all over again. Which is why in the boot camp, I am adamant that I want to show you how to trade so that you become the asset. I want you to be the person that owns the same skill that I have for the rest of your life, where you are the reason you're making money. I don't want to be an alert service for people that are in there day trading with me. I want you to become the reason you make money. I want to show you what to do. I want to show you how I do it. And part of that is being prepared for the open. So the first part is knowing which stocks you're trading, knowing which side you plan on trading them. And number 3, as being prepared for the open, is knowing what kind of open you get. Because here's the thing. Let's say, for argument's sake, we did that. We said, I expect this stock to open higher, this stock to open lower. I expect this stock to buy this stock above yesterday's high. Let's say you have 5 stocks that match that criteria. You only need 1 out of the 5. 20%, 1 out of the 5 to do exactly what you thought would happen and make money for the day. For the entire day, you only need 1 stock to do what you expected it to do. Because if you go into the day saying, I'm expecting this stock that opened lower yesterday, closed on the lows, I'm going to buy a test of yesterday's low. I think that's where buyers are going to come in again. If that stock does exactly that today, you're golden. You only need 1 trade to do exactly what you thought. Now, as you get more experience, you could do that same thing in 2, 3, 4, 5, 6, 7 stocks at the same time, which is something we're going to talk about in a bit. So this, day trading mistake number 2, trading the same stock long and short. Now, here's the thing. Market closes at 4, next day opens at 9:30. Between that time, you should say, I definitely want to be a buyer of this stock. The smart money is pushing the stock higher. It just keeps making new highs every day. It keeps going up. Maybe pauses for a day or 2, but then the bigger moves are back to the upside. Here's what we do as day traders during the day. We make money long. We buy stock, and it's going up. And then for some reason at like 1 o'clock in the afternoon, we're like, oh, this stock is just kind of like teetering on the edge. If I short sell this stock right now, I'm gonna catch the very top, and when it collapses, I'm gonna have the best price in the world. Wrong. I did that probably the first 2 years that I was a trader, and it's one of the dumbest mistakes I made, because I was managing these positions against the smart money, feeling like I was being like this ninja. I'm going to catch the top, and then I'm going to catch the bottom, and then I'm going to catch the top, and I'm going to catch the... Don't do that. If you're looking for consistency in your profit and losses, if you're consistent in, I want to see my account grow higher and higher and higher and higher and higher, right? Trade one side. Don't even look at the other side. And again, remember what I said at the beginning, trading is easy. You're basically just sitting back and saying, okay, I don't want to be a buyer of this stock today. All I'm going to do is look for entries. Do not say, wow, this stock is slowing down. I think I'm going to put out a short and just kind of catch the next move. And then when I kind of catch the next move, then I'm going to get out of that move, and then I'm going to stop. Just look for spots to buy. It's how the greatest investors and traders have made money in history, where they find a dominant bias. They find a dominant direction where it's so obvious. You're basically doing nothing but sitting back and looking for entries in that direction. There's one other mistake that kind of fits into this, or one other scenario where, let's say now you are obvious, you're sticking with one side of the market, and you place a trade in a stock and it doesn't make money. And then you place another trade in that stock and maybe you break even, or it doesn't make, it's not as easy as you expect it to be. You're like, you know what? I can't make money buying this stock. That means it's going to be a short sale soon. No, it doesn't. It doesn't. Stocks that should be a short sell already are a short sale before the day starts. If you're trading on that micro window where you're just trading the last 5 minutes worth of price action, that's going to be a lot of gray hair that you're going to get because you're going to be short, you're going to be long, you're going to be short, you're going to be long. And it's not going to be able to, you're not going to have conviction in your ideas. It's going to be incredibly difficult. So the moral of this here, day trading mistake number 2, stick to one side and ignore everything else. All right, number 3, trading too often or over trading. This is a very common myth about day trading where you're on the keyboard and you're banging the keyboard, you're banging the keyboard, you're banging the keyboard. And I get a lot of people ask about this before they join the boot camp. Are you teaching level 2 trading? Are you teaching scalping? Are we in and out of the market all day? The answer is no, I'm not. And I'm not looking to be in and out and in and out and in and out. I did that. And you want to know something? That game, that part of day trading has changed dramatically with algorithms and with computer trading. And if you don't think that's the case, you're fooling yourself. Yes, there's definitely going to be somebody somewhere showing you a video of how they scalped. They bought it at 10 cents, sold it at 20 cents, bought it at 20 cents, sold it at 30 cents. What they're not showing you is how they got hammered the other 42 trades that they did that. They're cherry picking that one little window where they tried for 5 days. Now, can you do that? Yes, it's possible, but you need a lot of experience. And quite frankly, it's hard to do. Being in and out, in and out, in and out, in and out, it's hard to do. It's very, very difficult to do. I like trading to be easy, which I'm looking at the higher time frames and specifically the daily charts and above to tell me what I should be doing. Then I drop down to the lower time frames and I simply look for entries. That's it. I'm not looking on the micro time frames. I'm not watching 100 shares, 200 shares, 300 shares, 400 shares, 500 shares, 300. I'm not watching it go. No, I don't want to do that, and you probably shouldn't either because you're trading against computers that are trading on micro milliseconds, actually. So trading too often fits into that category of scalping is very, very difficult. Level 2 trading is very, very difficult. Yes, I'm sure you could find somebody somewhere that's doing it. I'm telling you, it takes a long time to learn. I'm doing this for 20 years. Listen to me. It takes a long time to learn. Number 2 is trading everything. So let's say you have 10 stocks in your list, or you have an alert service, or you watch something on TV, or somebody sitting next to you or in a chat room, not sitting next to you, but next to you, calling something out in the chat room, and you're like, I got to trade that, I got to trade that, I got to trade that, I got to trade. No, you have to trade the ideas that you came into the day with, and that's it. So in our boot camp, we game plan for ideas where we have our meeting at 8:45 a.m., and we probably discuss 2 or 3 dozen stocks. But then after the market opens, or excuse me, prior to the market opens, and then when the market opens, you need to know which of those stocks that meet our order flow criteria match your personal circumstances. So then when the market opens, you're doing nothing but trading those 3 to 5 stocks, and that's it. And even if you have 3 to 5 stocks on your list, maybe 10, depending on how good you are, how experienced you are, you still should only be trading the ones that are perfect after the market opens, which you need to know what that criteria is, right? All right, so trading too often is a big mistake. You're over trading, throwing money away. I call this throwing money away because what happens is when you're trading too often, you are, and it's not obvious. When the market is obvious, you're making easy money, and now you're just getting back to even instead of being profitable. So trading too much is a big mistake. Number 4, trading too big on your initial entry. This is a monster problem, and you'll know you have this problem if you feel like every trade you place as a day trade is you get shaken out of it. Put a trade on, you get shaken out. You put a trade on, get shaken out. One little candle down, boom, you're out of the trade, and then 20 minutes later or an hour later, the stock did exactly what you expected it to do. That means that you're not letting the market give you feedback before you put on your initial trade. So example, let's say you want 1,000 shares. For whatever reason, we're not going to get into share size calculation. It's very common for me to put on a trade where if I want 1,000, I'll go in with 300. Or if I want 3,000, I'll go in with 500. I want to put a trade on. Jesse Livermore called these probes. What I used to trade with the guy, Mark Sperling, super unbelievable 7-figure trader. He would say, I'm just going in for my tier 1 entry. And that's it. He's putting on the trade to get feedback from the market to say, okay, it's time to jump in or it's not time to jump in. And the only way you could know that is by actually being in the trade. So what I do, and I talk about this a lot, I'm looking for a head start. I'm putting on a trade and I'm looking for a head start. I'm putting on a trade, I'm looking for feedback. So I'll give you an example. I had a trade last week in Kodak after that giant run to the upside, and I put on a small position. And it wasn't a day trade. It was actually a swing trade, but it was only 1/5 of what I eventually wanted that position to be. And the stock just kept drifting lower, drifting lower, drifting lower, never finding support. And actually, ironically, bad news came out. I don't know if it's Friday afternoon or over the weekend. I didn't see the date of the article. It was definitely after the market closed. And it never caught a bid. It just kept drifting. So I didn't get hurt on my trade because it was only my initial entry, my probe, as Jesse Livermore calls it. Mark calls it your tier one. I call it getting a head start. It's not that big of a deal. And what that does is it allows me to be wrong with the least amount of shares, and it allows me to be right with the most shares. So I'm looking for feedback. I'm looking for the market to tell me, nope, not yet. Nope, not yet. I'm looking for the market to say, there we go. We found a bid. Now we can add more shares. Now, the one big thing to consider here is that you need to understand how much a stock normally moves. If you're trading stocks that are not that volatile, it's very difficult to add a lot of times after that. So you really have to be conscious. If the stock only moves $1 per day, and that's when you're day trading, and it's already moved 40 cents, again, just as an example, there's not a lot of meat left on that bone. And it almost doesn't make sense to add more. Which, by the way, when you add more as it moves in your favor, it always should be less shares than your previous entry. You want a pyramid higher with less shares. So keep in mind, and this is the terminology that I think is very important. You want feedback before you add. And if you have less shares, that allows you to manage the trade a little better. It'll stop you from getting shaken out in that one little 5-minute blip to the downside, or one candle maybe even that takes you out to the downside. And then you start adding. And I'm going to get the question, well, how do you know when to put the next shares on? And essentially it comes down, if you're trading and you know that stock and you have your shares and it pushes down and bounces, pushes down and bounces, you're not wrong, you're not right, it's not moving yet, you will know when it's finally right or finally wrong, because you're in the trade. You're either going to be like, okay, finally, it's not spiking against me. It seems to be holding the bid. And every time it pushes up, it's not moving that much. Generally speaking, if I was pushed for an answer, I'm looking for a push and a pause. And depending on how much the stock normally does, that push and pause after maybe 3 to 5 candlesticks on my entry time frame, that's where I'm going to look to add. So get feedback from the market. That's a big thing. Number 5, not trading enough. And I know this sounds like contradiction to over trading, and it's not. What this actually means is that you are probably cherry picking from the stocks that you picked. I think this one's going to work, even though this one matches my strategy. I'm not going to take that one because the last trade was a loser and I lost my confidence. Stop that. Trading is all about an edge. If you trade my edge, order flow, everything happens over time, and we're trading what is probably going to happen next. We're not fighting the market. We're trading with the market. We're piggybacking on the smart money, which means we can't cherry pick. Oh, that one matches the strategy perfectly, but I'm going to let that one go because the last one didn't make money, and I had a fight with my boyfriend yesterday. I had a fight with my wife yesterday. I'm just not in the. You can't do that. You have to take every single trade. So it's not the same as overtrading. Overtrading means you're trading trades that don't match your strategy, and you're trading because you're bored. Not trading enough means you have a signal that matches exactly what your strategy says to do. Put the trade on, put the trade on, put the trade on. Do not second guess the strategy. And that's the very definition of letting the edge do the work, which is you take every trade, you take every trade, you take every trade. Now, I see people in the boot camp, they're like, well, my last trade was a loser and I lost my confidence. It's not your confidence that's making the trades. You're not even making the trades. Your edge is making the trades. The probability of what's going to happen over time is what makes or loses your money. Now, if you've made trades and over a week you've made money, that means you have an edge. So that very confidence, that very conviction, that very fact that you made money on trades that followed your edge and your edge, quote unquote, did the hard work, that's proof that you have to trade every single signal. Now, this is getting back to the other mistake, which is letting the market give you feedback and getting a head start on trades. More often than not, you're losing money for 2 reasons. Number 1 is you're waiting for too much confirmation before you enter. And number 2 is you're not anticipating your entries. And obviously, we're tying this into having the right share size on your initial entry. You need to anticipate. You need to know what that entry looks like well before it happens, which gets all the way back to mistake number 1, knowing what you expect to have happen on the beginning. So if you've made money because of your strategy, you have to be saying, okay, I'm going to have tunnel vision that every time I get a signal, I'm going to act like one of those algorithms that are in the market every day. I take the trade, I take the trade, I take the trade, which leads us to the next one, which is kind of like a bonus day trading mistake is you personalize each loss. Let's face it, we're trading because we have an edge. If you think that every single time you make money, it's like, yes, I'm awesome. And then every time you have a loss, you're like, oh, and you think, you think trading's no good and you can't do it, you have to stop doing that. Trading is about the edge. Trading is about, this is probably going to happen next, and I know what I'm definitely going to do. That's it. That's all trading is. If you look at a stock and it went up yesterday, it was a giant green candle. If the minimum thing you say is today I expect the same thing to happen, that's the very tiniest definition of an edge. There was buying yesterday. I'm going to look for buying again today. If a trade that matches your edge happens to not make money, it's not good, it's not bad, it's nothing. It's just one of 10, it's one of 20, it's one of 30 trades you might make this month. So the easier you make trading by pulling back, and here's what I do. I'll be like, okay, that was a good trade, just didn't follow through. That's different from, oh, what am I doing? Why am I making that trade? It has nothing to do with what I do every day. Big difference between a good trade that doesn't make money and a bad idea that you execute. When you separate those and keep those bad trades out, and you have a trade that just doesn't make money, you stop personalizing each loss, and that allows you the freedom to say, put on the next trade, put on the next trade, put on the next trade, put on the next trade that matches your strategy, because your edge is doing the work, which is a big deal. Your edge should be doing the work, not you. Stop working so hard. Have an edge, go into the day saying, and the week, these are the stocks I want to be buying. These are the stocks I want to short sell, which in this market is pointless. And then just relax. You're basically relaxing, saying, here's the best. I just thought of something good. When you get in a car and you're driving, you're not doing the work. The engine's doing the work. That's what having an edge is. My edge is order flow. My edge is reading the tape. And tape reading to me is kind of like where we're turning. So the engine is driving and taking me in a direction, doing the hard work, and then turning is the tape reading. That's the same thing with the market. We're not doing the hard work. The hard work for us is before the market opens, choosing the right stocks. After the market opens, we're basically just sitting back and looking for turns, which is up or down, getting in or getting out. The biggest thing I think out of everything we just talked about that could probably make the most dramatic difference for you is lowering your share size on your initial entry and looking for the market to give you feedback. Those are 5 that I think that could make the biggest impact. If you believe you have something I didn't pick on here, absolutely leave me a comment. I'd love to hear from you. We actually have in the community now, we're making a big list of trading rules, which is kind of fun to do because everybody has different experiences. And what's kind of fun too is where you are in your trading journey. If you're a new trader versus trading for years, the rules are going to be different. So it's kind of fun actually to see, because you can tell right away where somebody is. So if you have a different rule, drop it down, or a mistake, drop it down. And I'd love to hear your feedback. It would be kind of awesome. And if you're struggling, I would absolutely recommend that you get involved in the boot camp. For 30 days, we get to trade together for real time, in real time. I give lessons all day. I give my entries all day. We talk about trade management. And we have coaching calls once a week, which we actually happen to have today too, which really tie everything together. So have a great day, and I hope this video helped you. Take care, everybody.